Hey, good morning, everybody, and happy Friday. Welcome into Mining Stock Daily. Trevor Hall here, your host, getting you through another long weekend. It's a Memorial weekend here in the United States, so we will return Tuesday morning with the morning briefing. I've just returned from New York City from the SME Mine Finance Conference. The main theme through the last couple days was obviously federal government policy and critical minerals. And so that's really the focus for these two conversations I'm about to air for the long firm. First, we welcome in Adam Hawkins from Arizona, who knows federal policy and the mining industry like the back of his hand, running a really interesting outfit there. And then we turn to an old friend, Chris Temple from the National Investor, where we also dive in to federal policy, what it means for the election year politics in the mining industry and exploration industry in the United States, but also politics and economics of China. So some great insights here from both individuals. A special thank you to Fireweed Metals, Arizona Sonoran Copper, Victoria Gold, and Vizsla Silver for their continued support of the podcast. And again, if you wouldn't mind, hit that like, share, subscribe, wherever you get the video or the podcast. Thank you so much. All right, let's jump into it. A long episode today, two conversations. We start things off with Adam. Hey everybody, welcome into Mining Stock Daily. This is going to be our first interview here at the SME Mine Finance Conference in the Big Apple of New York City. And I'm happy to actually welcome in, first-time guest here on the podcast, but somebody I've known for a number of years here throughout my young career in mining. His name is Adam Hawkins. He's the founder and president of an outfit called Global External, based in Arizona. Adam, it's a real pleasure to finally have you on the podcast.
Great to be here, Trevor. Thanks for having me.
So this is not your typical kind of mine finance conversation. You run more of kind of a government policy, PR, kind of that in-between industry, government, and also communities. So maybe for best purposes, why don't you explain to all of us what you do?
Sure. So our firm kind of looks at two different sides of the equation. The first side here is risk analytics. So helping mining companies and the people who finance them understand social, political, regulatory, reputational risk factors. In some cases, before they even stake a mining claim or do a private placement, understanding how those things are going to play out, what the social dynamics are of communities, what things go to quality of life, and is mining consistent with where they are looking at the geology. On the other side of our practice, we help clear impediments, entitle projects, build lasting partnerships with home communities, and win hearts and minds in the places that mining companies operate.
I assume business is good and business doesn't stop on something like this.
We have not had any downtime since we started.
It's just really fascinating. So maybe tell me, because you and I first met, 6 years ago through the Association of Exploration Mining in America, AEMA. I think the last time you and I had actually met in person, you were about ready to take the helm as president of that organization, and then COVID happened, and I'm sure that was a ton of fun. However, I will say that, I always look back on those conversations we had circa 2019, because it really was kind of an eye-opener for me in my career and the way I perceive this reputational risk management approach, specifically in any part of a mine life, from discovery to production and closure, right? What has changed in the last 5 years as far as sentiment, what you need to communicate, and also what's important for companies as far as narrative getting in front of those communities?
I've definitely seen some pretty strong movement in companies trying to, rather than pretend that problems aren't going to happen, get out in front of understanding what potential risk is out there and how they can address it. I think that sometimes it can be a pretty big splash of cold water in the face when you realize that even though you may have really good, solid geology, good economic fundamentals to a project, if you're never going to be able to obtain social license, or if political factors are going to upend your project, it's a humongous risk that you have to be able to wrap your head around. And sometimes the answer to it is that these projects just aren't going to work, or they may not work right now. They may be good to put on the shelf, come back to when the planets and stars are in alignment. There's good deposits in any number of places. The deposit is not what makes an operation go from exploration to mining. It's all of the factors in combination and in concert with each other that bring something from exploration to an operating mine. I feel that there's been somewhat of a shift in some of the institutional opponents to mining, who have started to realize, especially if they consider themselves climate change activists or advocacy for climate policy, kind of side of things, that they can't accomplish those goals without a tremendous amount of hard rock minerals. We're starting to see that come together. We're starting to see some new coalitions form in the folks who are manufacturing, especially like electric cars, and some of the renewable industry folks are starting to understand that we do need good, solid base metals and precious metals to be able to further those goals.
Do you have any specific examples? I mean, that I know that we've seen these happen, but like, what's kind of been like one recent one that's really maybe caught your attention, surprised you?
Yeah, I'll give a shout out to, it's called ZETA. It's the Zero Emissions Transportation Alliance. So it's a combination of auto manufacturers and component producers and mining interests that have come together to advocate for policy and for positions that help advance the electric and, the zero emissions transportation sector. It's been a really, really good bridge between the two sides of things. There's this, it's funny, there's this general disconnect. Folks sometimes forget that everything that makes modern day life possible, it's on the periodic table.
Right.
And everything on the periodic table comes from one of three categories. You have agricultural products, you have extractive or mined products on the periodic table, and then the third category I call mined, M-I-N-D. So that is the product of human ingenuity using building blocks from the first two categories. The second portion of mined I call fairy tales. And it's this idea that you can hope or outrage or pray or forget your way into a solution to a problem. That never plays out. The reality of it is you need everything on the periodic table to make modern day life possible, and you've got to pay attention to where things come from. And when you're looking at solving complex problems that are challenging the future of planet Earth, the solution to the problem can't be worse than the problem itself.
It's funny you said that, just kind of coming out of the COVID years. I think we've heard that a lot over the last, since 2020. But I want to ask you about, on the government side, there's a number of incredible stories. You live in Arizona, so like that Resolution Copper saga narrative continues to be in the forefront of where the future supply of copper is going to come from for the United States. Every 4 years, seems like we've been changing administration, and therefore those priorities of pushing projects forward changes and gets hindered. And we can talk about the lawfulness of some of those decisions from administration to administration. We've seen the same thing with that Ambler Access Road up in Alaska for Trilogy Metals, a very similar but different story. We are in an election year here. And so I know you're always on the edge of your seat. You actually live for that type of stuff. It keeps you really excited. But when it comes to administrative changes, different policies being pushed forward in different ways, I guess it comes back to what is that jurisdictional risk right now of America for mining when it seems like we have these very late stage projects, and if a new administration comes in, you don't quite know where your project stands because of the, I guess, politicalness of it all.
I think there is a little bit more predictability here with this present presidential lineup because we have a current administration, which I would characterize as very much the third term of the Obama administration. A lot of the folks that were involved in their org chart are still involved in the, in Biden term one. In fact, some of the, even Vilsack is a retread as Secretary of Agriculture. So if Biden is to win the election, I think you're going to see more of the same of what we're seeing right now. We do have a 4-year playbook for how the Trump administration handled any number of things in this sector, and that gives us a pretty good idea about where that'll shake out. It's not quite as much uncertainty as when you have two non-incumbents running against each other who are not necessarily tied to a particular kind of dynasty of one party or the other. There's a lot more kind of fungibility in terms of where those things are going to go and where they're going to be on certain policy issues. Most people don't know this, but when you do have a transfer of power from one administration to another, there are some things that happen that I when I found out about it, I thought it was pretty curious. But so on Inauguration Day, each agency has what's called a beachhead team of the incoming administration, a group of folks who sit in a car across the street from the agency and wait for the inauguration to be complete. And once that's complete, they walk into the agency, they relieve any politicals that are still there of their posts, and they tell all of the career rank and file to put their pens and pencils down while they start to figure out how they're going to approach the new direction of policy. Those are really fascinating times to be in and spaces to be in because they start with trying to figure out what the agencies are doing and whether or not it's consistent with the policy priorities of the new administration. And so when the last time we had that was with Trump, and there was a lot of fungibility in terms of where things were going to go, how soon they were going to be able to get to, especially things that are pretty down in the weeds. High priority stuff, like what you just alluded to with Ambler. My guess is if you have a transition in administration, it won't be long before that is dispensed with.
Under that Trump administration, a lot of those policy decisions, specifically with mine development, happened very late in that presidency. Why was it always an 11th hour type thing with those major decisions? I mean, not just Ambler. I mean, Resolution made headlines, and then the Pebble Mine made a huge headline, and people got caught by surprise in that one. But these were 11th hour decisions under Trump.
As much as you and I live and breathe the mining industry, and all the folks I'm sure who are listening to this podcast live and breathe this industry, when you look at the greater schema of what, let's just say, the Department of Interior or the Department of Agriculture or the EPA has to deal with, we're pretty in the weeds. I mean, so it does take a while for folks to get their heads wrapped around it and figure out what makes sense. And so, yeah, it did put us pretty far down. On the interior side of things, within the administration's time under the Trump administration, you had a transition from one secretary to another. from Zinke to Bernhardt. Um, with Bernhardt, who is just a remarkable guy. He had a lot of experience from Bush, from his time with Bush, but also just kind of understanding how the agency, how the department worked,
Mm-hmm.
and being given a pretty clear direction from the president himself to, like, basically, go about it as he saw fit. Um, believe he wrote a book about it. It's really interesting, but having somebody who's seasoned and experienced in how these things work really makes a difference. And that's why, where, like, folks like to pick on the DC swamp creatures and the political insiders, but you need folks who understand how that city works, how these agencies work, how to deal with the issues that 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 confront the agency, regardless of who's in charge. When you get somebody who doesn't understand that in there, it takes them a while to be able to figure out, because you come in with all these grand ideas about how you're going to switch things around, and the reality of it is that some of that stuff is practical, some of it is quite impractical.
Do you think that was a lesson the Trump administration learned pretty quickly when they came into office?
I think any administration has to learn that lesson, regardless of even how seasoned they are, to some extent. Some are better than others. But yeah, I mean, there's always, they always have to figure that out. The thing that worries me, honestly, about, like, where things will go, and I think, if Biden's reelected to another term, you're definitely not going to see as much balance in the way that policy is pushed out. I should hope that they would go that direction. I mean, if they care about electing another Democrat to the White House, I would encourage them strongly to be measured in the way that they govern. But typically in second term, it tends to be more towards the actual party's will.
Yeah. We were actually having this conversation at dinner last night with a great group of people about how, obviously, in an election year, things get, the politique is reinforced, right? And so we're seeing plays out of the Trump playbook that Biden's pushing. For example, the latest tariffs on Chinese EVs and raw materials, right? It only has to be this year before an election that something like that would happen. But that was a playbook that we saw from Trump 4 years ago, or longer than that, right? But I guess we lay that out there. My follow-up question for that is, if there is a change in administration, where does that leave things like the Inflation Reduction Act and the Defense Production Act, all this money that's been supposed to be allocated towards resupplying critical materials, the reshoring of manufacturing, all those things? Is the train so far down the track now, even if Trump does win and comes in, like, is that going to be a hard one to slow down and maybe change that policy, even if he wanted to?
I think they'll figure out ways to be able to dispense with it within things that are, politically acceptable to them. So no, I think it'll still be there. I mean, the difference is going to be, if we do change and there's a second term of the Trump administration, I think they have a lot of the stuff that was in the lessons learned department that they won't have to worry as much about playing catch up with. They'll hit the ground running with. That would be what I would expect. I know a number of the folks that were within the the political positions within the agencies that we work pretty commonly with are know where they left off and intend to pick up where they left off. The question is going to be ultimately what happens in this election. If Biden gets reelected, the probability of another Democrat following him is pretty low, just historically, when you look at when you have 2 terms of a single party president. History tends to inform that it will change parties at least for 1 term. But who knows who's going to be on the ballot then? And that's a long time from now to be thinking about that. And, what the Democratic Party nationally is going to look like. I mean, we were having this conversation. It's funny you bring up political conversations at dinner. We were having one ourselves last night over some.
It's hard not to.
Phenomenal, phenomenal Italian food in the Village, and the question was, name one ready for prime time Democrat that could run and be successful as president.
I mean, I have one.
Yeah.
Yeah. No, I think Colorado Governor Jared Polis has been knocking it out of the park in the last six years.
It's good. It's good suggestion. I mean, we had a couple of names came up. Mark Kelly from Arizona was one. But ultimately, where is that next crowd, and where is the Republican equivalent to?
Right. And actually, we had the same conversation on the other side. The governor from Ohio, I can't remember his Vance. Yeah.
I mean, so there are a lot of things, and if you think about the run up to when Clinton won the Democratic primary, in the early days of that, there were very few people that were talking about Bill Clinton as a viable presidential candidate. As some of the primary results started coming in, people started thinking differently. But you just didn't see that seriousness there. And there was a lot of talk, in the early stages of the Republican primary, leading up to the 2016 cycle about whether or not Donald Trump would ever be a viable national candidate for the Republican Party. Folks are frequently wrong about this stuff.
Well, how about, could this potentially be a year of the third party candidate really making hay with RFK Jr.?
I doubt it.
You don't think so?
No, I doubt it. Third party candidates, they're spoilers. So if you look at, Ross Perot, if there's anybody the Clinton folks have to thank for their election, it's Ross Perot. If you look at that and you look at the portion of the vote that Ross Perot took from HW.
So if people are out there voting for RFK Jr., who does that benefit in this election?
Biden. Yeah. I don't see that many potential Biden voters that are going with RFK, but I definitely have chatted with some folks who have been on the fence about Trump versus him. Maybe I'm reading this incorrectly, but if your third party candidate was somebody like Ralph Nader, I would say certainly that would be peeling off Biden voters. If you had a Bernie Sanders in there as a third party candidate, that would certainly peel off Biden voters. RFK's kind of appeal and his shtick is more, I think, appealing to folks who are inclined on the right.
Okay. All right. Oh, man. I'm not looking forward to the next 6 months.
Trevor, I don't think anybody in the United States is. Right?
But you've worked in this political field for a very long time, right? And I got to give you credit. I don't know how you keep your wits on you for this long, because it has just been every 4 years, it just gets worse and worse and worse. And you're to the point where, I remember back in the day, you could disagree with people politically and not get persecuted for it. But now it's straight to the gallows, man. And I don't know, like when you work in this, like that's got to make your job so much harder in the last 8 years.
Trevor, it's kind of funny because very few people actually know my personal politics. Virtually everybody who works with me knows where I'm at on one issue, which is mining. And as long as I have anything to say about it, mining, it isn't a partisan issue. It shouldn't be a partisan issue. You can't have modern life without mining, without mined materials. It's not a Democrat thing. It's not a Republican thing. And I will talk to literally anyone who will give me an audience and an open mind. I don't care how far entrenched they are in their beliefs about it, because I want folks to understand how important it is that we have this industry, and especially in our backyard here in the United States or nearby with our allies. This really comes down to China is waging economic warfare on the West, and in particular on the United States. They've lapped us several times over in the Belt and Road Initiative. They're trying to claw back human capital through their 1,000 Talents Initiative, where they don't have control of the mining within the four walls of China. They are tying up, just vacuuming up vast deposits of it worldwide. And we've let this happen. We've been asleep. We've been blissfully playing pretend that this doesn't impact us. And I don't want folks to forget the supply chain problems that we had during the pandemic, because that was really the first kind of wake-up call to this, a really transformative one. We can't keep letting this happen. And I don't care how you want to approach it. If you care about it as a national security issue, fine. If you care about it as a supply chain issue, fine. If you care about keeping us in the regulatory game in terms of protecting the environment, fine. If you care about human rights, I don't care how you get to it. We've got to get this back. One thing I tell folks who don't understand how this business works: if the federal government put 1,000 square mile fence around the middle of Nevada, a state known for its geology, and told the industry, get in there and mine it, no permits, no NEPA, no litigation, no regulations, just mine. We got to make this stuff here. It would take us a minimum, and the key word in this sentence is minimum, of 5 years to be able to identify new resources, figure out how we're going to build them, raise the capital to be able to do it. This isn't easy, quick stuff. Right. And so when you look at where we are in terms of our dependency on not just Chinese minerals or Chinese-owned minerals, but when you look at the smelting process, the refining process, the secondary, tertiary production process, of all the things that allow us to use these damned smartphones and live in the houses and apartments that we do, and drive the cars that we do, and get on the airplanes that we do. We have slept our way into a total dependency, and China knows exactly how to leverage that. They're a country that historically has not been an invader, but they understand economic warfare probably better than any other society on the planet. It's up to us to take it back. Sorry, that was a very long answer to.
But it was eloquently put, and I think that's where I agree with you wholeheartedly with every single word you said. But we're going to leave it at that, because I think that's a lot of food for thought for people to take. Adam, how do people reach out to you if they have any follow-up questions, maybe inquiring about your work?
Sure. Check out our website, globalexternal.com. Find us on X, Twitter. we're pretty easy to track down. But yeah, and the other one, and I'll give a quick pitch to the American Exploration and Mining Association, the annual show, first week in December in Reno. I hope to see everyone there. If not, maybe see y'all at PDAC in Toronto next year.
Yeah, I need to make it back. I haven't been there since COVID, actually. So it's time for me to go back, I think. All right, Adam, thank you so much.
Thank you, Trevor.
All right, well, here's a real pleasure of mine because Chris Temple and I have been doing these conversations on MSD for, I don't know, 5 or 6 years now, Chris.
Well, since you started.
Yeah, for a little while, I'd say. But this conversation is in person for the very first time. And my friend, it's a real pleasure to see you in the living flesh.
And likewise, it's nice to have the wonders of modern technology and Zoom and all of these different kind of things, but it is a lot more fun to get together and see one another in person.
Yeah, you tapped my shoulder and I about fell on the floor. I was not expecting to see you yesterday, but it's great. It's great to have you on once again. Here we are on a Wednesday morning. The metals in the markets are starting to pull back. Gold, silver, and copper, high-flying copper is having a pretty substantial pullback today. And let's talk about this kind of run-up, and not only precious metals, but the industrial and base metal complex as well, and the fervor that we had seen in the last several weeks now. Is it just kind of simple time for a healthy pullback and kind of bring people off their high clouds right now?
Well, Trev, first of all, on copper, I'll start with that because just this morning when we were getting ready to wind up for today's session of the Critical Trends in Mining Finance group here in New York, I read a thing this morning about how copper has an awful lot of hot money in it. And in fact, when I did a panel this morning on copper, I pointed out that you've got to be a little bit careful. I mean, long term, there's no question that we're going a whole lot higher for a variety of reasons. Too much demand and too little supply. And that's the story with most of the commodities to one extent or another. But near term, the lesson I like to give people when you've got markets that get all of a sudden hot, like copper did recently, precious metals also, but for different reasons. If you go back to 2007 and 8, one of my favorite charts to use to talk about times like this is the crude oil chart, where in well under a year, you saw $140 plus per barrel, at the time a new all-time nominal high for crude oil. And I think it was 8 or 9 months later, something like that, you were in the 30s. Neither of those numbers truly reflected the supply and demand as a commodity for crude oil. But it did reflect that an awful lot of hot speculative money can get into everything from time to time. And you've got everybody on one side of the boat at 140, and then all of a sudden markets crash. Everybody's trying to get liquid, and everybody goes to the other side of the boat. So I look, copper long term has got one of the best setups. Jeff Curry, the former commodity guru at Goldman Sachs, now he's moved away from Goldman, but still covering commodities. He said there's not a single better setup he's seen in his career of any single commodity than copper long term. I thoroughly agree with that. My own take has been that copper should be the next uranium by rights, because we look back, we see that the uranium price has gone up fivefold because of that much more extreme supply-demand disparity long-term. And, so we went up, $18 a pound to 110, back to 80-something. Now we're crawling up again. And in a couple of years, uranium is going to be $2.50 a pound. $250, not $2.50. So look, copper, I said, could go to $3 in the next year. If you get all of a sudden acute recession fears in the U.S. that we're not going to have a soft landing. China is a very interesting story right now. I've been writing and talking about it incessantly in recent weeks, that you've had China stocking up on a lot of stuff, but as their currency has been going through a slow, unofficial devaluation. If it becomes official, because that's China's only option these days is to inflate or die, and they've got to do it more than anybody on the planet and relative to their economy. If they devalue their currency more and decide, okay, when our currency was less bad, we stocked up on gold and oil and whatnot. Now we're going to sit on our hands for a while. That's all the markets will have to hear, and then the same people rushing in on the long side of copper will sell it or even short it. But that'll be brief. because again, the overwhelming story for copper is the extreme lack of supply coming on to meet the global demand for a whole host of things.
Yeah. All right. So we've had that conversation for the better part of a year. But let's talk about like your approach and how to maybe play this market. If we do get a pullback, that will be a pretty decent buying opportunity. I'm right there with you in believing that. But if you're looking at this, we are starting to see some incredibly geopolitical jurisdictional risk, right? Yesterday morning, Solaris Resources announced that their minority investment with Zijin was off the books, not happening. And, we can read the news release and understand what they're communicating in the news release, but guys like you and I, maybe think there's a little bit more happening underneath the cover. But when it comes to Chinese investment into copper projects, do investors need to be weary about watching the politicalness of capital and where it comes from into these big copper development stories?
Well, absolutely. I've said for quite a while now, long before this copper move or even the gold move before it, that we are already in a World War III over currencies and commodities on this planet. The U.S. Department of Defense is aggressively looking to fund projects with, quote, friendly countries to try and take some of that Chinese influence away. But I'll tell you something, 3 weeks ago, I was in Washington for a similar conference to this, but there was, more retail investors at that. This is all of, guys like us and industry people at this one. But one of the speakers that they had, Trev, from the federal government was very candid, and I was appreciative of that to hear her comments. But she basically said that here's where we're at. We have a system in the U.S. where we profess to want to build this energy transition, green economy, whatever moniker that you want to use for the years ahead. We've got layer upon layer upon layer of regulatory body, regulations, oversight, the ability for people with no economic or geographical interest in the project to sue to try and stall it over some nebulous claim that they probably don't even understand. They just have the ability to do it. So this is why we're in this, we're plodding along. We've brought, relatively speaking, a knife to a gunfight. And this woman said China, in contrast, which is why they continue to eat our lunch globally, China does what we should have done years ago in the first place. When it comes to all of our needs for energy and critical materials and metals going forward, we look and say, okay, here we are in the year 2000. We're looking 50 years down the road, 100 years down the road. What can we reasonably expect as far as technological advancements? What are we going to need physically for all these different things, for the labor forces, for the supply chains and stuff, and set about building the structure to do it. Instead, we wring our hands and obsess over all these regulations and bodies and oversight. China, on the other hand, just says, okay, this is what we need. Let's go do it. Now, it means that they don't have the same system we do. It means that they're still a major polluter. I'm not excusing that. But I'm saying that, again, we brought a knife to a gunfight. And it's no wonder that at the same time that this whole EV thing, for example, in the U.S. has run aground somewhat. What's our answer? Slap tariffs on Chinese ones because they're actually doing it right.
Yeah.
And that's not how you run a long-term economy, and it sure as hell isn't the way that we become independent from China on all these things. So, yeah, we've got to look the world over and figure out what we can reasonably do. I think there's a lot more that we should do within our own four walls. I mean, to me, it's criminal that we're spending time and money worrying about borders in Ukraine and Russia rather than our own. We're trying to take China's neighbors like Australia, Japan, South Korea, and others, set them against China and their neighbors. Meanwhile, who's got the preponderance of the business in South America, building ports and whatnot and bringing those things to market? It ain't us.
Right. Well, and you basically just described that just-in-time mentality that our economy has, we did really well with. We had done pretty well with that for a long time with the realm of within globalization. We could do that, but if there was any sort of aha moment from COVID, I mean, there's a lot of them, but this COVID really said this just-in-time mentality isn't going to work anymore, and so. But we're at least where I'm starting to see a little bit of more recognition of, really thinking long term. Now, have we acted as quickly as we probably should have? Absolutely not. But with you, like when I hear when I hear government officials actually speaks a little bit of truth, it is kind of refreshing because we don't get enough of that, right? But it does seem like people are starting to become, specifically policymakers, are becoming a lot more aware that if you're going to think long term, like you've got to start acting quickly as far as these resources. And it's not just on the back of EVs. I mean, it is just everything.
It is everything.
It is everything. So, I mean, me just saying that out loud, I mean, would you agree or disagree that maybe that sentiment shift is starting to be awakened a little bit and starting to think, what are we going to do for the next 20 or 30 years?
It is somewhat, and you've got, interestingly enough, two major things happened during this Washington conference because a lot of us were in Washington. Number one, that was when the Senate ratified or they voted on the uranium bill to get us off of Russian and other external sources. That was good. The president signed that since then, of course, and has now freed up $3+ billion for more uranium production and enriched uranium in the U.S. That's great. The other thing that they announced during this conference was that for the first time, federal money was going to be available as a first matter for actual extractive activities and mining. Before that, it was everything but. There still is a major bias against mining activities. There's still this, what I've called imperial hubris that we have as a society. I'm not talking about just the Biden administration here. I'm talking about this as a long-held attitude that we have as the U.S., that we can get what we want, when we want it, at the price we want it from any place in the world, because if you don't give it to us, we're going to kick your butt or drop bombs on you. Okay? Those days are over. And we're starting to get that wake-up call real fast here. You look at what's going on in New Caledonia in just the last few days. Former French colony, France is trying to reassert control because of all the nickel that's in New Caledonia. So now you got an uprising in the whole island, the whole country, against the French. Imperialism is done. Some people didn't get the memo yet. Some are hypocrites, like the French there, like Biden wanting to get battery metals from the Congo and nickel from Indonesia. Those things don't fly anymore. And so I think that's one of the wake-up calls we need to have as a country that's going to jumpstart once we finally get it. It's going to jumpstart being a lot more serious about watching our own backyard. We need to be the ones to be big brothers to South American nations, not China, because that's our backyard. Okay. And, this resource nationalism move with New Caledonia, with what happened in Panama, which was a dopey example of it, where they cut off their nose to spite their face and cost themselves a lot of revenue. But look, the free lunch for big countries, especially like the U.S., where we don't have to see how the sausage is made. We'll let the little kids in the Congo work in mud and chemicals up to their neck so that we can feel good about having the cobalt in our battery for our electric vehicle. That's ending. And that's, I think, one of the messages that we need to get as a country and get rid of this hypocrisy, too, that we have. And a lot of Americans have this, Trevor, that where we want to feel virtuous by driving an EV. And every single person I've ever talked to that has a Tesla absolutely loves it. I've got nothing against EVs. But let's be honest about where the products come from. Let's be honest about the mining and the processing and everything that it requires, and make intelligent decisions as a society. But because we haven't really done any of that. We just start with this lofty goal, and it's one of the other panelists in Washington. I love the saying that he made when it comes to all of these platitudes and lofty goals on the one hand, but economic and physical reality on the other. His comment was, in the contest between physics and platitudes, physics has got a perfect record. Yeah. And we're finding that out the hard way as we go along.
Yeah, it's funny how that happens, isn't it? I want to pivot here. I want to talk a little bit more of the macro on the back of this election cycle we're in. The market's now pricing in possible 2 rate cuts, but it's kind of waiting until after the election. So unless something absolutely breaks between now and November, it seems like rates are going to stay where they're at. The Fed funds rate's going to stay where it's at. If we get something in November, it's probably going to happen, I think the day after the election. If we do have a winner, then we'll see. But I mean, it's just kind of a mess. I mean, but we haven't seen the data. I mean, there's been one little bit come in line, a little bit softer CPI print, but that's not enough data to support a rate cut, at least in my mind. But the Fed's stuck. And if we see another uptick in inflation throughout the summer, then you're going to be questioning, do they even hike? But I don't think they want to do, obviously they don't want to do that. I don't even know if they can do that. I mean, their hands are so tied right now, and they have this election to deal with. So whoever's the winner, I think Jerome Powell is going to pretty much have a pretty good understanding where his job lies after November. But, just kind of watching this, like, is it just kind of you sit back and wait for November to happen and then start pricing in a Fed fund decision that changes?
Well, it goes well beyond that, Trevor. Now, the Fed will always claim that it's independent, which is a lie, because we would not have a $34 trillion debt were it not for the Fed enabling this. Once upon a time, the Fed let the market decide whether the elected officials were running the nation properly. And once upon a time, that didn't go well when interest rates went way up into the double digits back in the late 70s and early 80s, but we didn't have such a thing as quantitative easing back then. The Fed had not made the decision to start monetizing the debt as it has done aggressively since then, and must continue to do as a matter of mathematics. But I'm going to throw you a little bit of a curveball as far as the main thing that is going to dictate the Fed policy, and that's China. China has the world's biggest debt to GDP ratio of anybody on the planet. The U.S. doesn't have, not even Japan, when you add up public and private debt. Now, China decided a few years ago when they started what was, they called, not my term, they called the marketized default of Evergrande, the biggest real estate and financing scheme in the world that all of a sudden was insolvent. China started a process which they have since abandoned. The process they started was to actually make some people take haircuts, because you can't just bail this thing out, as the Fed might do, and the Fed did do in 2008. You've got to let people get hurt. You've got to let this froth and this gross abuse of debt that China has really engaged in for years, we've got to roll that back. Well, it got to be too much, and they're too worried about a deflationary collapse and what that would do to the government. So in the recent past, if you look, and I just had it in my newsletter, if you look at a chart of the Chinese yuan, it's down about 12 or 13% in the last several months. There are persistent rumors in the markets. The Financial Times had a great story about this in the last couple of weeks, that they may do a little bit more of an aggressive kind of exclamation point devaluation, which they haven't done in, I think, 9 years in China, because they've got to keep their foot to the floor. They are in what, the dean of us newsletter writers, Richard Russell, he coined the term inflate or die. That's the mode that China has now lurched back into. It's why they are even more aggressively trying to flood the rest of the world with cheap products that are building up in their factories and building up in shipping yards and receiving yards and stuff like that. My belief, with that long-winded setup, is that when the Fed has no choice but to start reducing interest rates, and they'll have to come up with a sales job to explain why they're doing it well before they get to their sustainable 2% inflation target, it's going to be because they got dragged into a new tag team devaluation of everybody's currencies in the world.
Okay.
And that's coming in within the next 12 months or sooner.
Really?
Yes.
Wow. Because they did really try to stimulate when the Hang Seng Index was like falling off a cliff. They tried multiple times to stimulate that thing, and there would be a nice little bump in the market for like a day or two, but then it just kept falling. Like they just couldn't do enough to get their markets moving in the right direction. You think that starts to continue?
Well, look, if you go back, Trevor, to the late 80s, Japan's stock market peaked in 1989.
Right.
The Nikkei was a bit short of 40,000. It was only in the last year or so that it got back to that level. The real estate market bubble peaked a couple or 3 years later. It's still, if you look at it adjusted for inflation, is not even back to its original peak. And that's notwithstanding the fact that Japan kept pumping money into everything over there. But sometimes that doesn't have a lot of what we would consider as inflationary traction. The market is destroying money through these asset price devaluations from an overvalued place faster than they can shovel new money in through monetary policy. So that has been China's problem. And now they're trying to be more aggressive. And okay, well, we got to print even more. We got to lower reserve requirements even more, et cetera, to see if we can at least slow down the bleeding elsewhere. But this is what happens in any country where you have a fractional reserve banking system. We regrettably set the standard for the world. China, for all its talk about being communist, has outdone anything Keynesian that John Maynard Keynes thought of in his wildest dreams, okay? Let alone anything that was ever thought of by the mad monetary scientist of this country, Alan Greenspan. So they went just nutso more than anything. I mean, what happened in the U.S., Trevor, with the mortgage bubble and real estate and stuff that busted in 2008 and, took a little while to recover, that's nothing compared to what China has done in building up its tentacles all throughout the world, its Belt and Road Initiative, all of the ghost cities that it still has in that country, all the manufacturing capacity and whatnot. So their choices have become that you flood the system with money to at least maintain an even keel without having everything implode. And that's what is going to inevitably happen here. Because first you had Japan. Then we talked about the Japanification of Europe because they're dead in the water, their economy, banking system, and everything. You just got to keep interest rates down and keep priming things just to keep everything from imploding. Now it's happening to China big time, and they're fighting it. And we're next.
We talk a lot about if a U.S. economy breaks, and maybe the simple question in this conversation is if a Chinese economy breaks, what happens to that Belt and Road Initiative? What happens to all those projects spread throughout the world that's either been completed or just about to be completed? It is the effects, the effects of that would have throughout the world. We saw it in 2008 with the Great Financial Crisis. Obviously, that had global ramifications. The way you eloquently painted that picture just now is it's almost like tenfold.
Yeah.
It wouldn't just be China; it'd be a China and America. So you take the two largest economies, and they both break.
The people that control the United States government and our economy and system that are behind both the Republican and Democrat parties. This is not the Orange Wonder. This is not Joe Biden. Doesn't matter what political party of the two parts of the uniparty is in power. It's the same people that have got this fear that America is going to lose the imperial advantage that we've had since the end of the Second World War. And like the Chinese philosopher said, they would rather blow up the world and rule over the ashes than the alternative, and that is to lose the empire. So there have been a number of ways in which this country, and Trump was doing it, Biden is doing it now, and again, it's more the people that run, the think tanks, the big multinational organizations, the banking system, corporate America, the military certainly. They would like to be able to knock China down a couple of pegs and have more rebellion, because there's already been some on a part of some of the countries in Africa and in Southeast Asia and even South America, where China sucked people into billions of dollars of debt for garbage projects. The hydroelectric dam in Ecuador that, one of our heroes, you and me both, is John Perkins. Folks, you need to read this because all that happened is that China has taken over as the big imperial power from what the U.S. used to do. And the countries involved are no better off than they were before. They thought they were getting a better friend in China. They went from the frying pan into the fire. So you can see with this government's policy, and it was even discussed at this conference yesterday with some of the people from the administration. They're trying to get Australia, Japan, South Korea, other neighbors, as I mentioned this a minute ago. We're going to encircle China, have them break relations with China and deal with us. They would love, the folks in the U.S., they would love to knock China down a couple of pegs, then be able to swoop in later and reassert our global dominance that we've been losing in fits and starts. But here's the big problem. When we used much the same strategy when it came more to military spending and whatnot against the former Soviet Union, and the former Soviet Union finally did collapse and go into the ash heap of history, there were not major economic and market repercussions to that. Among other things, the Soviet Union wasn't barely a rounding error in overall economic growth. China is the second largest economy in the planet, and they're involved everywhere. The markets are interconnected, even though they've been net sellers somewhat of Treasury securities. And there is no way, if China has a major problem or a collapse, that we don't get dragged along with it and everybody else in the world. And that is a worrisome thing.
Yeah. And kind of a wild question. It seems a little bit of like a big curveball here, but gold. Do you think gold buyers are seeing this? I mean, obviously Asia has been a huge buyer of gold here in the last couple months. We're starting to see a little bit more buying in the West, but not to the breadth that we were seeing in Asia. But I mean, do you think those Asian gold investors and buyers are kind of seeing this and like, I gotta have some sort of protection?
Oh, I don't think there's any question of that. People who have followed the gold market, you and I included, have seen that this move to record highs, $2,400 plus for gold, has come about with zero help from West. I mean, it was until recently, and Tavi Costa Crescott, he updates these charts all the time. You actually have seen declines in Western ETF balances, and even in gold itself. Forget about gold mining stocks. Even in gold itself, there's been declines in ETF balances. So that's really a glass half full story, because when it's really going to get fun is when the same light bulb goes off over the heads of U.S. generalist investors. They say, "Holy crap! We were sloughing this off from 1,800 to 2,400 now, but now this is getting real."
But there's no reason for them to, right? I mean, the stock market's hitting all-time highs. You're getting 5% on a 2-year, bond. Like there's no real reason. There's no fear. There's no fear trade in the West, right? I mean, we're in a bull market. Have no fear. Like all things are good.
Well, the old fangs are back. The Magnificent Seven's back. The meme
Roaring
stocks.
Kitty's back, man.
Roaring Kitty is back. On the social media and so forth. But we all know that's going to end up being a flash in the pan.
Yeah.
And when it's really going to get fun, and again, I think that China has got as much of a chance to bring this about as any other event. But again, because we're still, I think, for commodities generally, we don't have a green light quite yet. We've got a yellow light because there are still enough deflationary concerns that could give us a brief deflation, not for consumers, regrettably, but in the markets. Something breaks in China, they can't control it right away, or in the U.S. or whatnot. That still gives us a yellow light. When the green light comes on is when the point comes, not if, but when the point comes that we are still well short of the 2% inflation target here, but the Fed has utterly no choice but to start lowering interest rates and reducing, and making even more money available, and let alone get to resurrect QE and add a zero to the end of it if things really turn to crap for a while.
Right.
That's when it's going to be green light for all the commodities going forward. Gold is going to continue, I think, to lead the way for a while.
Yeah. All right. Chris, thanks so much for your time. It's really good to see you.
It's great to see you too, buddy. We gotta break bread and have a cocktail later on.
Yeah, I think we can make that happen. Although I had a few last night, so I think I gotta slow down. All right, that's Chris Temple, everybody, from the National Investor, and more to come here from New York City.